Hi there, Serial Trader here. Let's just have a quick update here on the major indices and starting off with SPX. So this 5-wave impulsive rally off the bottom as of today is officially not complete yet, as we broke the highs we previously had in place at 2738.98. Today we traded as high as 2748.19 and closed slightly off that at 2744.73. So what is going on here? Well, it looks like the fifth wave of this overall sequence is still in progress, so it may become an extended wave. And there's a few things we can look at here. We could just do a simple reverse Fibonacci off this little pullback we had, and that'll give us some reverse fib targets to potentially look at to the upside. So the 1.382 target would be 2760 roughly, and the 2.0 relationship will be 2796, so just below that December high at 2818. So it looks like the December highs are going to come into play here, barring that we don't get an immediate reversal of the downside, and there's certainly no evidence of that yet. Now, this Elliott channel, even though we initially broke down out of that lower boundary line, we've obviously started coming back up into it. We're just kind of on the bottom of it here. So this could just creep along and grind a little higher before we can form some sort of top. So short term, higher is still the way to be looking. I know I actually got stopped out on that futures position, and then I actually did a couple little long scalps after that. So you can't always you can never tell the market which direction you want to go and pull money out of that way. You have to just go with the flow. So even though we're working this overall pattern that may very well have a very bearish resumption, or resolution to it, I should say, on a very short-term basis, especially scalping or intraday trading, long is still kind of the bias to be having here. That's certainly the case. Okay. Now that being said, it's certainly possible that we come into these December highs or even exceed them, and that's certainly allowable in the expanded flat scenario. Obviously, this could still be considered a running flat the way it's labeled here, as long as we stay below those lows. But I wouldn't hold my breath. We're close enough now that it almost seems inevitable that we're going to at least knock on the door of those December highs. But we shall see. Things can turn around quickly, but so far, no reason to believe that that's the case here. Okay. Now that being said, we can go to the Thinkorswim candlestick chart. And we're right up against this 200-day simple moving average once again. And we basically closed, well, slightly on it, basically, or sorry, slightly above it, basically right on it. So right now that 200 MA comes in at 27.43, and we're at 27.44 on a closing basis. So we're right there. And yeah, I definitely wouldn't rule out testing these upper resistance areas here. I wouldn't necessarily recommend it as a trade, as this still could, turn weak any moment here. But if you are going to play at it, be very short term about it. Use nice tight stops, all that sort of thing. Okay. Now let's go to the Dow Jones Industrial Average. And okay, so on the Dow, basically the same picture here. Obviously that 200, we're now above that on the Dow, and actually we came down to test that 200 and had to act as support previously there, so that's interesting. So the Dow's December high comes into play at 25,980, so definitely can't rule out an attempt at that here. And other than that, it looks very much the same as SPX. We're in some sort of impulsive advance. Looks like we're in the later stages of the fifth wave, but no signs of reversal just yet. And obviously that potential top that was discussed previously, that's been invalidated as we made new highs. Okay, so that's the Dow. And on the NASDAQ composite, let's have a look here. So on the NASDAQ composite, We're not quite up at the 200-day simple moving average. That would come into play at 74.60, which would be slightly below the December high, which comes in at 74.86. So NASDAQ's basically knocking on the door of its 200 and the December high. So I would anticipate a likely test of those levels, at least, if not an exceeding of them. And other than that, the wave pattern looks much the same. We're in some sort of 5-wave impulsive advance off the bottom, and it looks mature, but no signs of a top yet. Okay, and on the VIX. So on the VIX, what we're looking at here, really scraping the bottom. I still like that the VIX looks like a good entry here for some sort of at least bounce off the bottom of the range. But you have to give it some patience. Give it at least a month if you're buying VIX calls, or if you want to try go long VIX futures or buy TVIX or some sort of other volatility instrument. You can certainly do that. Looks like a pretty attractive, at least bounce candidate here. But other than that, not much to say about the VIX. Okay, the VIX tool. Peek in on that. And that initial sell signal that was given here, that's been canceled out now as we've gotten back below the red moving average on VVIX and back above the blue moving average on SPX, and obviously making new highs. So once again, this is just on a neutral signal, and we'll have to see how this plays out. But so far, nothing to gather from this of any importance. Okay, and I'll also mention before I end the video, so after we've seen a decline of the magnitude and the nature that we've seen from the September high to the December low, after a decline like that, now it's certainly not unusual to see a bounce from those oversold conditions, although this bounce greatly exceeded I'd say pretty much everyone's expectations, including mine. But that being said, I've looked back and looked at various market events such as this, and just basically every major decline we've had, whether it's a decline within a bull market that continued, or if it was the start of a larger bear market. Either scenario, the probability of coming back and retesting the lows, or at least doing a significant retracement of the advance, it's about 70%. So about 70% of the time, you do come back, if not retest, at least have a significant retracement of the overall move. And the other 30% of the time, where you don't go straight up, but you have what's called a V bottom, which is what currently is displayed here. A V bottom where you come up in a significant way, you pause, maybe drift sideways, have a minor pullback, and then continue higher without any significant retracement. That happens about 30% of the time, but it's also notable that when that happens, that 30% of the time, it's usually after an extreme lengthy bear market, not just this what was it, like a 3-month pullback that we had basically. So typically it goes lower percentage wise and takes longer in time to produce those V bottoms where you don't have that big retest. So that's interesting. So probabilities based on historical behavior of the markets certainly favors at least a significant retracement, which is certainly implied by the Elliott wave interpretation here. Once we do complete this 5 up, whenever that is, wherever that is, we would expect at least a significant 3-wave decline into some Fibonacci levels, right? And depending on the wave count, obviously, if we are in the expanded flat scenario, as shown in this chart here, the completion of this 5-wave advance would actually imply a move to beyond the December lows. But again, that's all just theoretical at this point. All we know is we're working a 5-wave advance that is not complete as of yet, but certainly getting closer to that point. All right, that should be good for now. Check in later in the week if something interesting happens. If not, do an end of the week wrap up. Serial Trader signing off.